What's going on, Moon Gang? I hope you're having an enjoyable weekend and Easter holiday. This video will be your weekend update on both AMC and GameStop. I'll specifically be focusing on FTDs, aka failure to delivers. Make sure you stick around until the end though, because I'll also be giving you the most up-to-date short interest numbers on both of those stocks, and then I'll be laying out the key technical levels so we are better prepared for the upcoming trading week. Before we get into all that though, don't forget to join up with the Moon Gang by hitting the subscribe button. And also as a quick reminder, if you want to use this trading software, it's Webull. There's a sign up link in the description of this video. If you do that and also deposit $100, you'll get 2 free stocks. All right, let's hop into it. So what is an FTD? In the stock market, failure to deliver is more of a high-level term that basically means you can't make good on your obligation. It applies to stocks, options, futures, and a lot of other things in the market. And it also applies to being long or short. For example, if you buy something, aka you're long, but then you don't have the money for it, that means you can't take delivery. And then if you're short, as in you're selling something into the market that you don't initially own, that means you can't make delivery. Both of these are failures to deliver. In the first case, you don't have the cash, and in the second case, you don't have the goods. So if you're watching this video and you are curious about what's going on with AMC and GameStop, there's a good chance that you've heard of naked short selling, which is an illegal practice, and that would actually be under the umbrella of FTDs for the short selling side. So basically, it's like under the umbrella of FTDs is naked short selling. To get a little bit more into that, it's kind of that same concept of you're selling something into the market that you don't own. Basically, if you're trying to sell something, you actually have to borrow it from somewhere, and it can happen if you're a retail trader. Most likely, if you're watching this just like me, you won't have the ability to do it. But if you're working as like a hedge fund or a prop trader, they can do it. But as a reminder, it is definitely illegal. And so naked short selling, you're selling something in the market that you don't own. This is bad for the stock for 2 main reasons. Number 1, you are basically, since you didn't borrow it, it's almost like fraudulent selling pressure, because like you should, to short sell, typically you borrow from someone, then you sell those shares to the market, and then when you're done with the position, you buy it back. This time you didn't borrow it from anyone, but you still sold something to market, so it's fraudulent selling downward pressure. And second, because you didn't borrow it originally, in a way you're almost diluting it, whether you want to call them synthetic shares, phantom shares, ghost shares. I don't really care what you're calling them, but basically you're selling something to the market that only exists on paper. It's not a true share of that stock. So this has been discussed a lot in the community about GameStop, AMC. It's an FTD. Naked short selling is illegal. It's very, very bad for the stock. So I feel like the next logical question is, well, how prevalent is this? Like, what are the numbers? This data is a bit delayed. I will make sure to post this website, this SEC website, in the description of this video if you want to check it out. So just so you know, the values of totals failed to deliver shares represent the aggregate net balance of shares that failed to be delivered as a particular settlement date. I just wanted to point that out because I see people adding the totals for the month, and that's not really how it goes. Like, it's the aggregate net balance, so it's most useful to look at the most recent day. But as soon as this data is posted, it's actually already kind of old. So like right here, the most recent is the first half of March, and if you look into it, the most recent I think we have is of March 12th. I looked up the values, and feel free to double check me on this. I highly recommend you do your own due diligence. Remember, I'm not a financial advisor. I'm just sharing like the type of research that I find. So for AMC, the FTDs were 31,000 on March 12th, and that's once again the most recent data we really have. And for GameStop, it was 155,000. Also on that day, so AMC was at 31,000, and on that day, just to give you the size of the ratio of what we're dealing with, on that day, AMC traded 111 million shares, and GameStop, which had a FTD of 155,000, on that day traded 26 million. So obviously, it's a very, very small ratio. Now, to be fair, with that being said, to the best of my understanding, there is a potential way for hedge funds and other players to actually hide their FTDs. It involves a kind of complex positions in the options market. And I can make that as a standalone video if you're curious in the mechanics behind it. But as of Thursday, April 1st, this most recent April Fool's Day, The DTC did submit a new proposal, a new rule, which would make that much more difficult, as in they're trying to stop people from hiding their FTDs. So right now, hey, Matt, do you think 31,000 and 155,000 for AMC and GME respectively are accurate? I would assume that some are being hidden. I can't really comment on the magnitude of how many there are out there. I would assume that there are more, but I also just don't have the data or evidence to prove it. I know that there are ways to hide FTDs, and I know that the DTC is now fighting it. I don't really want to speculate too much. I just want to share like things that I can prove through data and evidence with you. But that's the current state. So overall, FTDs, failure to deliver. You can't deliver on your obligation. It happens all across the market, specifically with short positions. That's when naked short selling comes in. It is illegal. We're starting to see some of these FTD numbers. You can check it out yourself on these websites. The numbers we're seeing right now are relatively low, but I wouldn't be surprised if they're intentionally hidden and pushed down and the numbers are actually larger for both AMC and GameStop, and most likely other stocks throughout the stock market. So now, with all of that out of the way, I do want to give you some information on the current short interest and utilization and all that stuff with both AMC and GameStop, and then we'll roll right into the technical levels to be watching this upcoming week. So as a quick reminder, AMC has an outstanding shares, as in the total shares in the world without counting any of these like synthetic, ghost, phantom shares, whatever you want to call them, of 450 million. And the free float, as in the shares that you and I can trade, is at 404 million. So with that in mind, right now, the shares on loan is 116 million. And then that means that the utilization rate is around 85%. Out of the entire pie that people are willing to lend out to be shorted, 85% is being used. And the estimated short interest is currently 18%. For GameStop, the outstanding shares are 70 million. The free float is 45 million. As of now, the shares on loan are 12 million, which means the utilization rate is around 58%, and the estimated short interest is just under 23%. So if you were to compare these to other stocks across the market that are considered to be heavily shorted, these numbers are blowing them out of the water. Yes, AMC and GameStop are still heavily shorted. We are at the magnitude we need for a short squeeze to become a reality. And in fact, like they're kind of, well, AMC is actually trending upward, and then GameStop is consistently holding. The numbers are, that's the big question I get all the time. Are these numbers big enough to see a short squeeze? Yes. Does it mean that a short squeeze will happen? There's no guarantee of that. I'm in the game. I have my positions in AMC and GameStop. I definitely want it to happen. I want these hedge funds to basically pay a big price, but the numbers are there. Basically, the part of the puzzle that we're missing right now is just the bullish sentiment, the bullish buying. We just need a nice follow through in price action to kind of turn up the pain on the hedge funds who are currently shorting both of these stocks. All right, now let's hop into a technical breakdown of both of them, just so we know what price levels are of interest to the market when it reopens tomorrow. Before we hop into that, just so you know, the S&P 500, an ETF that tracks 500 of the biggest companies in the US, basically it's a really good barometer of the overall stock market, just hit a new all-time high, just above 400. So if your other portfolio, your blue chip stock investments, they're most likely doing pretty well right now. The one thing I wanted to point out to you about this, though, is on the bottom here, we have the RSI, which stands for Relative Strength Index. It's basically a technical indicator that maps out bullish against bearish momentum. It has values of 0 to 100. When it gets very high, especially above 70, that's considered to be very bullish, aka overbought. When it's very low, specifically below 30, that's considered to be very bearish, aka oversold. A lot of people use this tool as a reversion thing. So basically, if it gets low, they look for the stock to bounce, and if it gets really high, they look forward to sell off. Basically, they look forward as an oscillator just to like return to more of like that neutral in the middle thing. As you can see, I'm bringing this to your attention right now. The overall market, even though it's looking great, very, very strong, it's theoretically right now considered to be overbought, as in I wouldn't be surprised if it's running into resistance right now and it needs to take a bit of a breather. But remember, no technical indicator on this planet is ever going to be perfect. All right, so with all that out of the way, let's talk about AMC, just the price levels I'm interested in watching. Just so you know, when I say technical support and resistance, all I mean are price levels that in the past the stock has bounced off of or been rejected by. These are important because in the stock market, important price levels in the past tend to stay important price levels in the future, and we also see many circumstances where support turns into resistance and resistance turns into support. So to put this another way, pretty much like once an important price level, it tends to be important in the future. As of now, GameStop is trading at $9.36. Over the past week, it dropped 14.4%. Over the past month, it's up 9%. And over the past 3 months, it's up 333%. As of now, the closest support that I have identified is $9. The closest resistance is $9.74, and then that's followed by 10. And we also have this trend line that I would like a breakout above that just to signal an official change of trend. But also, remember what we were talking about with the RSI? It's very, very close. In fact, at one point on Thursday, it actually tapped the oversold territory. So I think just from the RSI alone, there's a better statistical chance of it moving upward than downward. But remember, no technical indicator is perfect. All right, let's talk about GameStop. GameStop currently trading at $191. Over the past week, it actually gained 4%. Over the past month, it's up 54%. And over the past 3 months, it's up an incredible 894%. GameStop, the closest support, which I've talked about a ton, is 185. I'm definitely looking for that to continue to hold. And the closest resistance will be the region of 200 to 212. 200 is a key psychological level, and 212 is the site of a previous gap down in early February. So I'm looking for a breakout of that or a breakdown of 185. Past that, we also have support at 158. In terms of the RSI, it's pretty much in that neutral territory. It's not really giving us too much of an indication, but the other technical structure that I'm currently watching is actually this wedge right here. So in the world of technical analysis, this triangle is actually referred to as a bullish pennant. What is a bullish pennant? Basically, the stock is trending upward, and then it goes into a triangle where we see lower highs and higher lows. It's a period of consolidation. If you crack open any technical analysis book, it'll tell you that this is a bullish technical structure. They commonly break upwards, but remember, there's always counterexamples to pretty much every technical development out there. But if you were to look at a book, it would say this is bullish. It's referred to as a bullish pennant. So I am looking for a breakout and a test of 212. Past that, I'll be looking to see how GameStop reacts to 250. So I hope you enjoyed this weekend update. We went over failures to deliver, naked short selling, the current short interest rate for both AMC and GameStop, and then the important price levels I'll personally be watching this upcoming week. Don't forget to join up with the Moon Gang by hitting the subscribe button. Make sure you're going over that bell icon, clicking on it, and switching it to always, just so you don't miss any of the Monday to Friday live streams or the technical, fundamental, or portfolio update videos such as this one. And as a final reminder, don't forget to check out that link to Webull. You can get this trading platform for free, and on top of that, if you sign up, you'll get 1 free stock, and if you deposit $100, you'll get a 2nd free stock. In my opinion, it's definitely worthwhile to check out. Until I catch you next time, from me, Duck Shirt and Chair, best of luck in the markets.